Well, the conflict over in Iran is continuing to escalate, and as a result of this, we are currently seeing oil prices absolutely surging over the last couple days. And I'm under the belief that this surge in oil prices will have a massive impact on the stock market, especially if it continues in the direction that it's going right now. And so in today's video, we're going to go over exactly what is happening within the Iran conflict, how it's impacting oil, what sort of effect that could have on the stock market, and what I'm doing in my own portfolio right now as a result of all of this craziness. So we have a good bit to get into today, so let's not waste any time at all and let's get straight into it. So as I mentioned before, what we are seeing in the Middle East is pure escalation. It's escalation on all sides, and I'm sure you've seen the news, so we're not going to spend too much time on this, but we are seeing attacks on Israel, from the United States. Iran is attacking military bases for the United States and other countries such as Iraq. I mean, it's been a whole lot of escalation, which is typically like the worst case scenario. Generally, when situations like this arise, you want to see it kind of just be a quick thing. When they do start to escalate, that's when a whole bunch of dominoes can start to fall, and dominoes are indeed starting to fall because oil prices are now surging. Matter of fact, if we go look at Brent crude oil, what you can see is that we saw Brent crude go from 73 to 83 over the course of just a day, which is a lot. Okay, I mean, that's a surge of about 12.5% on oil within a day. And again, that's a lot. And I say a day, it's more like a couple hours. And that is a big, big move up. Now, the reason why oil prices are climbing like this is because strikes during this Iranian conflict have hit oil tankers traversing the Strait of Hormuz, which is a critical global shipping choke point that sees roughly a fifth of the world's oil supply cross through its waters on a daily basis, accounting for roughly 15 million barrels per day. So let me break this down simply, okay? So in/near Iran, there's something called the Strait of Hormuz, which is a body of water in which we see, of course, shipments of oil cross through on a daily basis. Again, about a fifth of the world's supply. Well, as a result of this conflict in the Middle East, we're starting to see a major slowdown on the Strait of Hormuz because many different oil tankers have been hit, causing slowdowns. Many companies have said, hey, we're not going through there. We don't want to get hit. And it's caused a big, big, big delay. Iran also, who has major control over the Strait of Hormuz, has said no one's allowed through. So it's really slowed down overall oil delivery through the strait recently. Now, think about it. If they provide for about a fifth of the world's supply of oil, and there's a slowdown here, that means that there's going to be, of course, a major holdup in the supply of oil, or the supply of oil as a whole will go down, which does what? Causes oil prices to go up. Because at the end of the day, every asset's price or everything's price is simply just based on supply and demand. And when something's supply goes down, yet its demand remains the same or increases, naturally its price has to go up to create a new point of equilibrium. And so because what we are seeing right now in Iran is impacting the Strait of Hormuz, reducing the total supply of oil for the world, guess what? Oil prices go up. Now, you may wonder, well, Tyler, what does that even have to do with stocks, right? Like when I buy Apple stock, aren't I worried about what Apple is doing? No, it's much bigger than that, right? And the reason why oil is so impactful in terms of the stock market is because of the chain of events that happens when oil prices increase. So generally speaking, when oil prices increase, that causes higher CPI and PPI, or inflation for consumers or inflation for producers. In simple terms, it just causes inflation to go up. So when oil goes up, gas prices go up and inflation goes up. Why? Because oil and gas are, of course, the backbone of society. Think about farmers, for example. How do farmers tend to their crops? They're not picking them by hand. No, they have machines. What do machines need? Oil and gas. And so if they have to spend more money on oil and gas to fuel their machines to pick the crops, well, guess what? That causes a higher production cost for them that they're not going to want to take on. So what are they going to do? They're going to raise the price of their crops. And guess who has to pay the higher price? Consumers. So now producers have to pay more and consumers have to pay more. Or in simple terms, inflation goes up. So when oil prices go up and gas prices go up, inflation goes up. And what happens when inflation goes up? The Federal Reserve comes out and says, well, we need to implement more restrictive policy because if this inflation problem continues, then that's going to be quite problematic. People are going to run out of money. Banks are going to start to collapse. It's like or companies in general will start to collapse and it becomes a whole thing. And so the Fed has to step in and they have to create more of a restrictive policy to try to pull down those inflation rates so that things don't continue to get out of control. And we all know the stock market doesn't love that. Whenever the stock market doesn't love at all whenever they see, of course, restrictive policy. Why? Because restrictive policy means less liquidity. And I know I'm going a big chain here, but it'll all make sense in a second. But When the Federal Reserve, of course, implements restrictive policy, there's less liquidity, meaning people have less money, they have less capital. At the same time, that inflation is eating away at their capital. And so people don't have money. And if people and corporations don't have money, what do? They either stop investing or they sell assets, and the stock market at that point comes to a grinding halt. It comes to a stop. Okay. And so when you put it all together now that whole long little yap session of mine is over with, oil prices go up, which causes inflation to go up. And as a result, the Fed has to implement restrictive policy, which means people have less money, which causes asset prices to go down. And so you can't just ignore what's happening with oil prices. You need to pay very close attention to it because it does have a massive impact on stock market prices. Okay. And we are starting to see that happen. As a result of course, again, what we're seeing over in the Strait of Hormuz, we are seeing oil prices go up. Matter of fact, if we actually look at the overall performance of the oil and gas industry in comparison to just the stock market itself, it has been consistently outperforming. Even today, the industry as a whole is up 0.3% when the S&P 500 is down 0.5%. That's like an 85% spread or a 0.85% spread, which is a big difference. Just going to show that the actual oil industry is responding to this. This isn't just a rumor. No, this is actually happening right now. And so as a result of it, we need to be paying attention very closely to this because if this continues to spiral out of control, we could see this have real effects on the world as a whole. Because you may think, well, if it can't go through the Strait of Hormuz, can it just go through another place? And it can, but not all of it. So, from what analysts assume, there are pipelines in the area that could absorb maybe 5 million to 7 million barrels per day of oil, but that still leaves roughly 8 million or so kind of unattended to that's just become stranded. And that's obviously really bad as a whole. And that will continue to cause a supply constraint, which will strain the whole world and cause inflationary issues. And if that continues on, and you do see that happening for weeks at a time, that is going to cause, of course, major issues economically for the globe. Okay. Now, is that guaranteed? Right. And I guess that's maybe the question that a lot of people are asking themselves. Like, okay, so we know oil prices up, problem. Is this like a right now problem or is this just a potential problem? I would say right now we're still in the realm of this being a potential problem. Because a lot can happen over the next week. A lot can happen over the next 2 weeks. Realistically, if this whole Iran situation does de-escalate at some point, the Strait of Hormuz does kind of go back to normal. We start to see general production of oil go back to normal. You may see a little small spike in inflation still, but typically that will resolve itself. The Fed won't really take that super hard into consideration with what they do. You won't see restrictive policy implemented, and the stock market shouldn't be impacted, especially for what it expects to happen in the future. So if this does resolve itself somewhat quickly, no, I think that the stock market will be okay. But if this becomes a growing problem, Strait of Hormuz comes to a halting stop completely, nothing's going through, yeah, we absolutely could see this really implement or, kind of impact the market. And you could start to see the S&P 500 showing weakness and fragility as a result of it, right? Because the S&P 500, for example, has been kind of range bound for quite some time now. And something like this could be the exact thing it needs to end up breaking through some of these previous support levels and heading down towards some of those lower levels. So it is going to be incredibly important that we pay attention to what is happening in the Middle East, whether it's de-escalating or escalating, and how that's impacting the Strait of Hormuz, because what happens there is then going to turn around and have the biggest and largest impact, in my opinion, on what happens economically, especially in terms of inflation, restrictive or unrestrictive policy from the Fed. Okay, so I know I said a lot here, and hopefully this wasn't super complicated. I don't think it was. But if you have any questions, don't forget, just leave me one in the comments. I'll answer it for you as you need. But yeah, this could be problematic, and you need to watch this because it will have an effect on the market. Okay, it will have an effect on the market if this continues on. So what am I doing in my own portfolio? Honestly, not too much. One thing that I have considered is opening up a little bit of exposure to oil stocks, because when we do see environments, or situations like this pop up in which you have inflation rising as a result of increased oil prices, well, guess what? Increased oil prices mean that some of these oil companies generate higher cash flow, right? They generate more revenue, and it's no surprise as to why you are seeing the oil industry performing well, not only on the daily but year to date, as there have been tensions rising within this, because they perform decently well during times like this. So I have considered increasing my exposure in my own portfolio to oil, maybe adding in an isolated position in some of these different oil stocks. I haven't committed to that yet because, again, I am just a little bit like, Not quite sure the length and the longevity of this situation, but if it does feel like it's something that will be very long, I may increase my exposure there. I've also considered increasing my exposure to the financial industry. We've seen the sector underperforming, especially year to date over the last few weeks. But if we do see inflation become a problem and that does actually start impacting policy, there's a world in which we see that the rates change, of course. And when rates change, of course, banks are capable of capitalizing on spread, and they're also able to capitalize on the increase that they're able to charge on their loans, which could increase their cash flow, which is why 5-year return and 3-year return on the financial services has in many ways outperformed, especially in 5 years when you do factor in that major inflationary period we had a while back. Okay. And so I do think that maybe increasing my exposure to financial services and oil services, oil and gas could be the way to go. I haven't made that commitment quite yet because I do like to keep my portfolio very small, very tidy. I don't like adding or removing stuff super often. I like just letting it do what it's doing. And that's why it is still performing pretty well, for nearly $40,000 just over the last year. So I'm going to kind of just pause for now. I'm not doing anything super risky, but I am considering that as my next move. So I'll keep you updated there. I'll also keep you updated on the whole Iran situation, the oil situation, how it's impacting the markets and much more. And guys, don't forget, this is a brand new YouTube channel. We got 3 subs. Shout out to us, squad. It's us 3. But if you guys do enjoy the content, if you find it valuable, please do subscribe. It would really help me out a lot. And yeah, so all in all, that's about that. Hopefully this video is valuable. If you have any questions, do leave them down in the comments down below. And I can't wait to see you all in the next one. See you, everybody.